Welcome to Singapore Property Talk Law. Today, we're diving straight into something that's probably, well, hitting close to home for a lot of you. We're talking about rising rents for commercial spaces and the real pinch, it's putting on our local businesses. We're going to zoom in on Siglap Drive, actually. There's a row of shop houses there seeing some, let's say, significant changes because rents are going up. So, our goal today, understand just how big these hypes are, maybe explore why they're happening, and really think about what this means for the shops, the cafes we love, and maybe even for what you end up paying. Oh, and if you find this useful, please do like this deep dive and subscribe. That way you won't miss our future chats.
Yeah, and what really throws this whole rent issue into sharp focus is, well, exactly what's unfolding on Siglap Drive, like a little snapshot. We're just looking at 16 shop houses, right? But already, since last year, at least 3 businesses have shut their doors. They specifically mentioned rent. And it's not just closures. We know Flor Patisserie and Taki Pets, probably familiar names if you know the area they're planning to leave by the end of next year. Again, rent hikes making it unsustainable. If they go, that could mean, what, potentially 8 out of 16 units sitting empty.
Half the row. Let's really dig into those specific cases because they do paint a stark picture, don't they? Flor Patisserie, they've been there like over a decade, right? A bakery facing a rent jump from $5,400 up to $8,500. That's by next July. That's a 57% increase. Huge. The owner, Ms. Heidi Tan, she called it a lose-lose situation. That really says something. And then there's Serious Pet Biologics, pet supplements. Their rent, up nearly 30%, went from $5,800 to $7,500.
Mm-hmm. And that increase actually pushed them out. They had to relocate to Tai Seng, an industrial unit where the rent's quite a bit lower, on $5,000, I believe.
Right, quite a difference.
And it gets even more dramatic. We heard of one F&B place, unnamed, where the rent just doubled, literally doubled. $5,000 to $10,000 back in February last year. They closed immediately. And that unit, still empty. Even Taki Pets, you mentioned them. They renewed their lease first, but got hit with a, wait for it, 69.5% increase. 69.5. So understandably, they're now also looking for somewhere else, somewhere more sustainable long term.
It's quite telling, isn't it, that by mid-May this year, you said 6 out of the 16 units were already vacant.
6 out of 16, yeah. That's a high vacancy rate for a relatively small stretch like that.
And what really struck me was Miss Tan from Flor Patisserie. She mentioned on social media, this isn't just Siglap. She said lots of businesses across Singapore are, grappling with similar hikes. So while Siglap Drive is a very clear example, it sounds like it's reflecting something bigger. If we zoom out from that one street, what are the broader trends for shophouse rentals here?
Well, connecting Siglap to the wider market, the data does suggest it's not totally isolated, especially within that district, District 15. Now, overall, shophouse rents across Singapore, they only edged up 0.3% in the first quarter of this year compared to the last quarter of 2024. Pretty small.
Yeah.
District 15, that includes Katong, Jo Chiat, and parts of Siglap. That area saw a 12.2% jump in the same period. 12.2. So that really highlights that Siglap is feeling a much sharper version of what's happening more broadly in that specific part of Singapore.
Okay, 12.2% for the district versus 0.3% overall. That's a big difference. And we even have some actual rental figures for Siglap Drive itself from last year, right? From the URA Realis data, that's the official property data, it shows the median rent on Siglap Drive in 2024 was $7,350 a month. That's based on just 4 contracts, mind you. But the range was quite wide. High of $10,800, low of $3,500. Even that median, $7,350, feels pretty high. And now it seems those prices are being pushed up even more. So, okay. From the landlord side of things, what's driving these big increases? What are they saying?
That's the million-dollar question, isn't it? We do have some clues, though. For Taki Pets, their landlord apparently pointed to rising mortgage costs, higher interest rates, inflation pressures, the usual economic suspects affecting their own costs. For Flor Patisserie, it seems a bit different. That unit actually changed hands. It was sold in late 2021, and it sold for quite a bit more, like $3.2 million. Compared to similar units maybe a decade ago that went for like $1.75 million less. So the current landlord there mentioned, yes, rising mortgage rates again, but also just that the overall rental market value has gone up significantly. That's their justification for the $8,500 figure.
Right, so a mix of factors perhaps. Rising borrowing costs for some, maybe trying to get returns on a higher purchase price for others. Now, what about independent analysis? We heard from Mr. Nicholas Mack at mogul.sg. What's his take on why rents are climbing like this, particularly in places like Siglap Drive?
Yeah, his perspective is interesting. He suggests these rising rents could be a direct result of investors buying these shop houses at pretty high prices. And then, well, they need to raise the rents to get the kind of investment returns they're looking for on that expensive purchase.
Ah, okay, so the purchase price influences the rent needed.
Exactly. And landlords often look at what similar properties nearby have sold for recently. These become benchmarks, you see, when they decide what rent to ask for. So if a shop house down the road sells for a big sum, it can create this sort of upward pressure on rental expectations for everyone else nearby. Plus, Mr. Mack also brings up a fundamental point. Supply. There's just a limited number of these shop houses in Singapore, right? They're quite scarce. And that scarcity makes them really attractive assets, not just for individuals, but for bigger players, corporations, wealthy investors, family offices, people with deep pockets looking for stable assets.
Okay, so you have limited supply, high demand from investors potentially paying top dollar, which then might lead to higher rents to justify those prices. What does that mean for the smaller independent businesses, the ones that give our neighborhoods their character? How do they compete in that kind of environment?
Well, that's the worry, isn't it? Mr. Meg raises this concern. It creates kind of uneven playing field. Small businesses, your local bakery or pet shop, they often run on much tighter margins. They just might not have the financial buffer, to absorb these really big rent hikes. As we're seeing in Siglap, they become much more vulnerable compared to, say, a large chain or a well-funded company.
So pulling it all together, this snapshot from Siglap Drive, it really seems to tell a story, doesn't it, about the wider rental landscape. It looks like rising property values, maybe higher financing costs for landlords too, are definitely contributing to these significant rent increases. And the impact on established local businesses is, well, it's very real.
hmm And this whole situation, it really leads to an important question for you listening. How might these rising commercial rents, the rents paid by the shops you visit, eventually sort of trickle down? How might they affect the prices you end up paying for, well, your coffee, your groceries, a meal out in your neighborhood?
Exactly. It's that potential knock-on effect. And thinking longer term, if local businesses keep struggling with these rent pressures, what could that mean for the actual mix of shops we have? For the character, the diversity, the vibrancy of our local areas? It's definitely something to keep a very close eye on as Singapore's property market keeps, evolving. Definitely food for thought.